Today is Friday, January 2nd, and this is your weekly grain market review. For the week, corn and wheat were down around 12 cents, while soybeans dropped 26. Despite finishing lower, corn exports continue to remain fantastic. Other nations continue to take advantage of how cheap American corn is and are importing it consistently. Despite cheaper gasoline prices, ethanol demand is stable as well, ensuring domestic corn demand moving into 2026. Argentina's large corn crop is hurting the grain's ability to move up in value, as the majority of reports coming out of the southern hemisphere state that the corn crop is in amazing condition. Soybeans continue to trend lower, with March futures falling to their lowest levels since mid-October. Prices have retreated sharply from November highs as favorable South American weather and expectations for a large Brazilian crop weigh on the market. Export demand remains a concern, with U.S. soybean commitments running 32% behind last year, despite incremental improvement in recent weeks. China's purchases are still well below last year's pace. However, strong domestic crush demand continues to provide some underlying support. Something to keep in mind is that speculative traders and their firms still hold a sizable long position, which, if they decided to liquidate, could push the price lower. Wheat markets were mixed this week but showed signs of stabilizing. Kansas City wheat tested the lower end of its downward trend and found support, while Minneapolis led the complex lower overall. Export demand remains weak, with sales hitting a marketing year low, and global competition remains intense. If you have any questions about selling or contracting your grain, please reach out to your local Country Visions grain merchandiser. Otherwise, thank you and have a great weekend.